Before you even start searching for a home in Sarasota County, you should know that two homes with the exact same price could have completely different monthly costs, just because of things like HOA fees, CDD fees, and even special assessments. These fees could add hundreds or even thousands of dollars to your monthly payment. So today, I'm going to break down these fees in a simple way so you know exactly what to look for before you start searching for a home. Real quick though, before we dive in, I'm Adam Waxler and I've been helping buyers and sellers right here in Sarasota County for nearly 20 years. If you'd like my help, the easiest way to reach me is to call or text me at 941-465-9206. Okay, so one of the things I've noticed over the years is that when buyers first start their home search, their focus is almost entirely on the price of the home, but they often overlook the additional monthly costs, things like HOA fees, CDD fees, and special assessments. So let's start first with the one people are most familiar with, HOA fees. Obviously, HOA stands for Homeowners Association, and these are either monthly, quarterly, or annual fees that go towards maintaining the community. Here in Sarasota County, HOA fees can cover things like lawn maintenance, gated communities, community pools, fitness centers, and other resort-style amenities. And with condos and townhomes, even things like the roof and the exterior of the home are often covered. Now, what do these HOA fees typically cost? Well, it really depends on the community. Some have very low HOA fees, sometimes as little as $300 a year, like the community I live in here in Nokomis. Many, though, are going to be more like $300 a month, but really you could see HOA fees all the way up to $1,500 a month or even more in some of the luxury high-rises or some of these resort-style neighborhoods. Now, keep in mind, if an HOA is only charging a few $100s a year like mine, it usually means it's not offering anything in terms of amenities. In most cases, those HOAs are mainly focused on enforcing rules. Things like making sure the roofs are clean, yards are maintained, and the neighborhood stays visually consistent, meaning there's no outlandish house colors or things like that. So you're not necessarily getting a pool, a gym, or any lifestyle perks. You're mostly paying for oversight and enforcement. Now, on the flip side, higher HOA fees can include some really great amenities. But here's the key question you want to ask yourself. Are you actually going to use them? Because if you're paying $400, $500, $600 a month or more for amenities like a resort-style pool, a clubhouse, or a fitness center, but you're not using them, then you're really just throwing money away. So whether or not an HOA is worth it really comes down to your lifestyle and how you plan to use what the community offers. All right, the next one is one that catches a lot of buyers completely off guard, especially in newer communities, and that's the CDD fee. CDD stands for Community Development District. It's essentially a fee used to pay for the infrastructure of the community, things like roads, drainage, utilities, and other improvements that were built when the neighborhood was first developed. Now, here's the big difference between CDD fees and HOA fees. CDD fees are included in your property taxes, so you won't see them as a separate monthly bill, but they absolutely affect your total monthly payment. And they can be significant. We're talking anywhere from $1,000 to $3,500 a year, sometimes more depending on the community and how much of the original debt was already paid off. This is especially relevant in the more popular master plan communities in our area, like Lakewood Ranch and Wellen Park, where CDDs are very common. Now, here's something else a lot of buyers don't realize. Some CDDs are paid down over time and some are not. In certain communities, the CDD is structured like a bond and gets paid off over a set number of years. So eventually that portion of the fee may go away or at least be reduced. So it's not enough just to know that there's a CDD fee. You also want to know exactly how it's structured. Next, let's talk about special assessments, because this is where things can get expensive in a hurry. A special assessment is basically an extra charge that the HOA passes on to every homeowner in the community when there's a major expense that isn't fully covered by the reserves. Think a new roof on a condo building, the resurfacing of a community pool, or repairing storm damage after a hurricane. And these aren't small numbers. We're talking potentially thousands or even tens of thousands of dollars depending on the situation. I'll give you a quick example. After Hurricane Milton in 2024, many condos on Siesta Key simply didn't have enough reserves to cover all the repairs. As a result, a lot of condo owners were hit with significant special assessments. In fact, I had a listing at Sunrise Cove on the south end of Siesta Key, and the owners there were charged about $13,000 per unit after that storm. And that's a very well-funded association. So even in communities that are doing everything the right way, unexpected events, especially here in Florida, can still lead to assessments. Which is why, before buying, it's so important to review things like the HOA budget, the reserve funds, and even the minutes from the HOA meetings. And most importantly, before ever submitting an offer, make sure to ask if there are any current or upcoming special assessments. If there are special assessments, make that part of your negotiation. Depending on the situation, you may be able to get the seller to pay the special assessments in full prior to closing. If not, you as the buyer are going to be on the hook for any assessments that are being charged after the closing date, even though you weren't living there at the time the assessment was issued. Now, I want to be clear, none of this is meant to scare you. There are some incredible communities here in Sarasota, and many of them offer amazing value and amazing lifestyle benefits. The key is just understanding what you're getting into up front so you make a confident, informed decision. There are also plenty of older established neighborhoods in Sarasota with no HOA and no CDD at all. And for some buyers, that's actually the better fit. Or a community like mine where I only pay $300 a year. I don't get any amenities, but it does help keep our property values up. In the end, it really depends on your priorities. So, if you're thinking about buying a home here in Sarasota County and want help making sure you fully understand all of the costs, the CDD fees, the HOA fees, and everything else, the easiest way to reach me is to call or text me at 941-465-9206. And one last thing, if this video is helpful, do me a favor and give it a thumbs up. I'll see you in the next video.